Good afternoon, everyone, and welcome to another one of Avant-Garde's free educational trading webinars. We are thrilled to host Dan Gibby this afternoon. He is joining us. Mr. Gibby possesses more than 25 years experience in equity and options trading, with focused expertise in technical analysis, using options to hedge and speculate, and portfolio and asset management. He uses this technical analysis, market internals, and segment gauges, along with volatility, to trade stock and options using Master Trader's techno-fundamental approach. Dan formed Master Trader with Greg Capra, an icon in technical analysis, to educate self-directed traders in trading and investing. And we are thrilled to have him here this afternoon. Dan, are you with us?
I am, Natalie. Thanks.
Wonderful. Great to hear from you. Thank you for being here this afternoon and taking the time to put this presentation together for us. I know a lot of folks are already in the Zoom room ready to go. So if you are all set, Dan, you can go ahead and share your screen and pull your presentation up. While you're doing that, I'll remind everyone with us live, if you have questions during Dan's presentation, please feel free to type them in the chat box or the Q&A, and I'll get those to Dan either during the presentation, if they match up with what he is discussing, or at the end, time permitting. All right, Dan, I can see your presentation. Looks great, so feel free to dive right in.
Awesome. Thanks, Natalie. Welcome, everybody. We have a fantastic session, power-packed here today. I promise you that our approach hopefully is going to be very unique and inspirational and educational to motivate you to want to study the subject further. You are going to see through some introductory slides and many examples that we can get through in the allotted time, what a clear, precise technical approach we have to trading anything that moves. Today, we're going to focus on our technical approach to trading options on many of our most potent patterns. Again, because we're technical based, that is our starting point. Natalie showed you some obligatory disclaimers, and I'll just say it in a common sense format. We are speculating in the financial markets the same way that you want to buy real estate or open a business. We are buying and selling financial assets, stocks, options, futures, currency, crypto, a bag of rocks. And you have, or you should have, a systematic approach to doing that. And we seek to generate revenue from our approach. Of course, that's going to involve risk. And the regulators want us to tell you that common sense statement that you can, particularly if you don't know what you're doing, you can blow up your account, which unfortunately is what many people do. And then they, I call it the conscious, incompetent people. They're like, uh-oh, I just blew up my account. I better get some education. And then they say, Master Trader, which I found you guys, years ago. So here's a starting point. This is our way of skinning the cat in the financial markets. There's, I'm sure, many other successful ways, and I define success in the financial markets is having a systematic approach to objectively generating profits. How simple does that sound, rather? I don't care if your methodology involves looking at the moon, full moon arrangement. If you can do it consistently, and I don't know what you're doing, then hats off to you. This is our technical approach. We trade price action. Why? Because price does not lie. You have supply and demand, you have prints, and then we put the combination of those pictures together, which represents the sum total picture of all market participants trading that instrument on that time frame. And you can't lie. Management can lie. Let's see, people trying to promote their stuff, they can lie. Charts don't lie. So we take those pictures. That's our starting point, a compelling setup. And then we overlay these other concepts, the total of which makes our approach. And we say, okay, where is that setup in the trend? A multiple time frame analysis. Is that pattern on support or resistance? Is it showing relative strength or weakness to the sector in the market? You'll see in a moment here how clean our charts are. We use volume and moving averages, what we call secondary. I guess because it helps speed the analysis. We really don't need them. What are the broader markets doing? We use market internals both for swing trading, longer term trading, and day trading. We have different levels that we look at to give us information of whether the markets are at short term or intermediate or longer term turning points, like the COVID low earlier this year, with the VIX just skyrocketing to new decade highs, created the most phenomenal buying opportunity, last March, I believe. Position and money management and trader psychology, just like any business, if you don't have these two, you're not going to survive in this objective part. You want to open a gas station, you want to do anything, you start with a business plan, position and money management. How many shares are you going to do on this particular setup? Here's a very simple checklist, technical, so no setup, no action, I say. That's our starting point. And today we're going to be talking about trading options, both buying options, which is what I call a directional strategy. And we're using options because of the benefits that they deliver that are superior to buying the underlying stock or ETF or currency or future. And we'll get into that with examples. Income strategy, we call, very simply, we are selling options and credit spreads around short-term turning points, and we're taking the money, we're taking the other side of the option buyer's trade, so to speak, using our technical edge to say, well, that stock's not going down any further, that one's not going up any further, and our goal is to collect the money, and that's called an income trade. In fact, I'm watching the markets right now. We're down a lot. We're turning. I have a huge list of put spread candidates, but let's hold off. Can't get into this in a 30-minute presentation today, but once you have a bias, then there's different strategies that you can mix and match to meet your bias. Here's your position size and trade management, which is I'm in the trade and now I'm managing it, and we manage it with not only money management, but with the behavior of the underlying using technical analysis. It's that simple. Just some basics here. I don't know, I'm sure we have all different kinds of experience, people attending here today, but I can buy Apple computer, or I can buy a call option on Apple computer, which is a derivative. What is a derivative? It means it's a financial instrument that is derived or based on something else, the underlying. So this call option will move up in value as the underlying moves up. So as a directional trade, I'm going to buy a call option or other directional strategy, and I'm going to show you examples. In an income trade, we're going to be selling calls over resistance, puts under support, and we're receiving that money, and it's full profit as long as it stays within that short strike. So here are the benefits. We're profiting from a bullish bias for buying options, a bullish bias with leverage and limited liability. So you would lose a lot less than buying the underlying stock, which is going to cost you a lot more money. I'll wait on this till we look for some examples. So when we're selling options now, these are income strategies. Under support, we're going to sell a put or put spread. Over resistance, we're going to sell a call or a call spread. Let's just hold off. I like the examples a whole lot better. These are just 9 arbitrary, well, they're not arbitrary. They're 9 compelling pictures, which is our starting point. We're picture traders. Every one of these 9 slides are bullish. And then if you go back to the other slide of where is this picture in the trend, support and resistance, multiple time frame analysis, that's going to give us the probability to give us a bias of this stock is moving higher. This is what we call a master trader buy setup. This is a 180 reversal. This is a 1, 2, 3. This is a W bottom. This is a breakdown failure. I'm going to show you as many examples as we can in the time frame. And then we're going to decide when we see this picture of, do I want to do a directional option trade or an income trade? All right, so that's our foundation. Now let's spend the rest of the time applying this foundation to real examples. Now, we have a green trading room. I'll show you a slide that we do. We do live education on YouTube once a week. And then we're taking this education and we're applying it in real time to find new actionable trade ideas right there in the moment. But we just don't have the time to do that right now. So these obviously are old examples, but it's to illustrate today's topic. So this is a daily chart of Tesla. All of our screens are this simple and clean. They're not cluttered by oscillators, by snake oil salespeople trying to put these magical Uchikumi clouds and proprietary indicators on there. No. When you hear stuff like that, I mean, we urge you to run, really, or just treat it with extreme skepticism. The blue line is the 20, green is 50, red is 200. These are moving averages that we just use as a visual aid of what the trend is in short, intermediate, and long term. So I could take the candlesticks off and I could look at these moving averages. I don't even need to know it's Tesla. I don't care what it is. And I can tell you that this is a massive consolidation. And now we're not trading moving averages, but I know the message of them. The 20 is starting to rise above the 50, so I know it broke out. Now let's put the candlesticks back on. This rally took out a high and is going sideways. This is what we call bullish price action at resistance. This is what we call a wide range expansion breakout bar. Another concept that we always use in every trade we take is, it's called a price void. What does that mean? It means look to the left. Is there significant resistance for longs or support for shorts to allow for the pattern that you're trading to move with ease into the void towards the target area? Well, I need to look at a weekly chart, to look back, but this one, the answer is overwhelmingly no. It looks fantastic. So we gave 2 trades on this one. Directional, we bought the in the money 340 calls. So what buying a 340 call means is whatever my premium is, I didn't type it in here because it really doesn't matter for this discussion. It's giving me the right to buy Tesla at $340 on or before expiration. And I pay a premium for that. And as long as Tesla is moving up and becoming more valuable, well, my call option that I'm allowed to buy Tesla at 340 is going up in value also. And I, just as we're talking here, just for the fun of it, I looked at this, and from that entry test, I'm looking at it right now, from this pattern right here, Tesla went up to $488. So I grabbed this screenshot in September, and I'm just showing you 2 days. Now we did an income trade. And I already defined that for you, but repetition. I look at my chart bias and I say, where would I be comfortable of selling an out of the money put where I believe the stock is not going to go below for a few days until expiration? It's that simple. Now we got a checklist. You always got to make sure when you trade options, you're trading liquid options. So unfortunately, that kind of drops the tradable population to about 100. Whereas I would say there's 15 to 1,700 liquid stocks that you can trade. So that's a disadvantage, but I can't help that. No, I only want you trading liquid options. Now you could sell the 345 naked if you wanted to. You will generate bigger premium, but we recommend what's called a bull put credit spread. The premium you receive on the 345, you take part of that money premium that you received and you buy a further out of the money put. So in this case, we bought the 335s, which is now called a $10 wide bull put credit spread. And it's full profit as long as it stays above this green line. And we love selling short-term dated, like, with 3 days or less is great, but we have a service that only does 10 days or less. And the reason for that is time decay. That premium that the call buyer purchased is rapidly evaporating like a melting ice cube. So we take that concept, and the Greek of that is called theta, theta, time decay. So we have the defined benefit of theta, but we have the benefit of our technical analysis bias to make the trade overwhelmingly in our favor. So in that picture of 9 bullish patterns, the one on the upper left was called a buy setup. This is a buy setup. Does everyone know the KISS method? Keep it simple, stupid. Well, here's exhibit A of that. Here's exhibit A. A buy setup is, I have an uptrend. What's an uptrend, Dan? Higher pivot highs, higher pivot lows. And we have nothing proprietary, nothing. These dots right here, this is a pivot high, this is a pivot low. How do we define that? Pivot low, 3 or more higher lows to the left and the right. A trend is 2 or more higher highs, higher lows. That's an uptrend. My visual 20 is above the 50, it's above the 200. Now this is for, do you remember little Johnny jokes in school? 8-year-old little Johnny? Well, little Johnny, here's how simple it is. I want an uptrend, which I just defined for you. I want a retracement, and I want pictures of buying on a retracement on support. Well, prior highs is what we call minor support. Prior lows are what we call major support. So here are my pictures of buying at the 20, after a breakout, on minor support, on the 20 MA. There's different pictures. They're not going to be the same, but we teach you how to read the messages of the pictures. This was an actual trade. We gave a put spread. Actually, as I clarify that. This one was a directional. We bought 10 $14 call options. I like buying in the money calls because you're paying less extrinsic value. And again, I can't, I don't have time to teach the whole course, but the deeper in the money you go, you have a higher delta. So you're going to get a bigger bang for your buck as it moves higher as your pattern bias supports. This was another one on the slide of 9 above, of 1, 2, 3 continuation breakout. So look at my moving averages again. I got a mess on my hands here. No setup, no action. Do not trade until you see a high probability setup. This was the picture on that prior slide. A bullish 1, 2, 3 continuation. It's very simple setup. I want a wide range bar from consolidation, not far from the 20. Check. I want a bullish inside bar that stays in the upper part of this. Check. I buy over the high of those two bars if it's a directional. Stop under the low of the big bar. I have a void, look to the left, manage in between. So this was a breakout. We bought in the money calls. You can, and as soon as we're in, we communicate in Telegram to subscribers. We give them a technical setup. We give them a picture of the chart, and we give them trade management along the way until the trade is closed. I love selling in partial lots. We sold half here, moved the stop. We got trail stopped out here, made, $1.09 a share on a little swing trade. But on this stock, look, $1 is a big move. Another 1, 2, 3. You can see this thing was wild, blasted. It's settling down. It's getting tighter. Went up again, came down. Now I have a wide range bar, but that's a big move. That's a big move. Put tape over the prices. Visually, that's a big move. So I'm looking for a pullback. I now have two bullish inside bars. I got a bullish 1, 2, 3, and we bought call options over the high of these red bars and just went into trail mode. These are all directionals. You might be thinking, Dan, can I day trade call options by buying them instead of, and we love doing this on the liquid stocks. So the liquid 4 index ETFs, spiders, Qs, I like the best. They're more liquid than diamonds or IWM. And I love doing them on the FANGs, the Cisco's, Bank of America's, anything that's liquid. The options, liquid. This is 5-minute chart of the spiders. Broke down. And this is the afternoon. This is like 3:30. It might be hard to read here. 2 p.m., 3 Eastern time, 3 p.m., and then this is right at market close. So you had a wide range breakdown followed by a wide range reversal back up. Look to the left. There's a price void. We bought in the money calls, the 261s, or actually these were out of the money. And we paid a very little amount for them because we were expecting a big move. And this chart down here is, I think Interactive Broker, my partner printed it for me. It's showing the price of the call option relative to this. So this is also a great graphic showing you how calls are a derivative and they go up in value as the stock moves up. So I'm just eyeballing this because I didn't type it out. But let's just eyeball this and say we bought them up for $9. Look, it went up to $14 on this run. So you made whatever, based on how you managed it. All right, so this is we call it Master Trader Live. We've been doing this for 10 years on YouTube every Wednesday at noon Eastern time. This is where we spend some time, like 45 minutes, giving an educational session, and then we apply that information in real time for the next 15 minutes, applying what you taught, looking for tradable opportunities. So it's my partner, Greg, former master trader 10 years ago, but I've been working with him over 25 years. He's the most amazing technician I've ever met. So now in the remaining time, I'll just show you a few examples of income trades. This is just a different kind of chart of the one where I showed you above on the 9 bullish patterns. So I have 7 of them here. These are all 7 bullish patterns. And if you see that, you know, this simply, well, then congratulations. But that's what a course is to do. A course will give you the objective, competent knowledge to understand technical analysis. And then from that point forward, I just call it seasoning. You have the information, and then you now, you know, I'm a private pilot. So yes, I'm licensed, but I don't have the seasoning that my professional commercial guys have with 40,000 hours. So it's seasoning. I have tens of thousands of trades under my belt. You know, I know Natalie said 25, because I don't count the 20 before that, when the internet didn't even exist, and I'm walking into a Schwab office trading off their little kiosk in the waiting room. So all we're doing here, this green line is saying, okay, I'm comfortable selling a put option under support. You can do it naked. We already talked about that. But I like taking some of that money from selling the put, buying a further out of the money put. The difference is a net credit. That's your potential maximum gain. Option prices are quoted per share. So one contract represents 100 shares, 10 contracts, 1,000 shares. So they'll determine what your credit is. But we manage the chart. So if something's not working, we get out, even at a loss. Anybody you hear giving these webinars or in a sales thing, whatever, if they try to tell you, I have 98, 99% batting average, then I also recommend you hit the road. Because if they did, that would be a black box with billions of dollars thrown at it for the hedge funds to fund, and it would be a money printing ATM. We have an 80 to 85% batting average using our technical approach, which statistically dwarfs flipping a coin of 50-50, which some mechanical option traders don't believe in technical analysis. They're like, oh, this is all BS. Flip a coin, nobody can predict direction. Well, hate to say you're wrong. I have 30 years of data where we're 80 to 85%. Here's Netflix, gap down. This red line, I said, I don't think you're going to 1230 in a couple of days. Bought a further out of the money. I'm going to go kind of getting out of time here, so I'll go a little bit quicker. As long as it stays under this red bar, 10 lot, you make $650. But I don't sit around waiting to keep the full amount. It starts selling off, I'll take my money. This one was recent. Amazon had a monster bullish gap up. I watch it on an intraday 15-minute chart, and I just watch it to say, is this horse or dog or whatever analogy you want, is it out of steam? And under a 30-minute low, the answer to me is yes. Now, this is what we call a 0 DTE, which meant it was on a Friday. So Amazon reported on Thursday night. And I say, look, I don't think Amazon, after this took out the 30-minute low, it ain't going back to 252. So we did a $5 wide put spread, 52 cents a share, and full profit on that one. This was another pick. This is the opposite of a buy setup. Sell setup. So remember little Johnny? It broke down. My 20 is starting to roll over. I have a retracement and reversal at resistance. I have a wide range bar, red line. What are you going to pay me? So I go to the option table. What are you going to pay me to take this risk? So we sold out of the money call spread. And this one, I did the math earlier, $204. This one, I don't even know what it is. It doesn't matter. Continuation breakout. I don't think it's going under this green line. It's called a put spread, expired worthless. This one, do I want to buy calls? I'm sorry, do I want to buy puts or sell a call? What's my bias? So we've spent 30 minutes here together, and I'm sure you can see this. Look at all my moving averages. It attempted to break out. It's going sideways. I have a closing range expansion breakdown. I'm going to buy puts, and I'm going to sell an out of the money call spread over all these candlesticks highs. That's not complicated. Now, the terminology and in my checklist and going through them, of course, it's going to take time, like learning anything new. This little M top, it tried to break out, close with a bearish bar. As soon as it gapped down here, now I have the confidence. Now I have the confidence. It ain't going back above this high for a couple of days. Now, could it? Absolutely. That's what I said. We have stop outs and losses. But we're pattern probability traders. Once this gap down and took out a 5-minute low, we sold the 425, 430 bear call credit spread, $1 a share. In the same day, we closed half for 40 cents, which is, 60 cents, which is 40% of the max profit in one day. Bid 10 cents for the back part, move your stop. We're in management mode. So that's it. We allotted 30 minutes. Natalie says we can answer questions now, anything you like. But I'm Dan Gibby. You can email me, dan@mastertrader.com. Hope you enjoyed it. And this is our gift for you today. So our advisory, it's called the Advisory Swing and Options Trader. Using our technical approach, we buy stocks, short stocks, buy options, short options. My partner, Greg Capper, does an amazing detailed techno-fundamental market analysis video in the weekend letter. We have Telegram during the week where we send you trade updates, new trade opportunities. It's an amazing place to watch what we're doing. You learn along the way. We don't just say, do this. We say, we recommend, here's a high probability trade, and here's the technical reason supporting the recommendation, and then the trade management along the way. So that's it for me. Hope everyone enjoyed that. Thanks for attending. And Natalie, I'll turn it over to you for any comments or questions.
Great. Thank you so much, Dan. Yeah, I'm going to ask you to just leave the screen up here for a moment so everyone can write down your email address. We are pushing right up against our time frame, but if anyone has some quick questions, you can type them in the chat or the Q&A. We did get some questions earlier, Dan. It was just how to contact you for any follow-up questions. So you're answering those right now with your screen. So you can write down dan@mastertrader.com. Please feel free to reach out to him directly for any follow-up on today's presentation. In the meantime, I'm going to take the screen back just to wrap things up with us. If anyone is not yet a client of Avant-Garde and you're interested in opening a brokerage account, check us out at tradeagt.com. give the team a call, 312-858-5748. Take advantage of our commissions membership pricing for free through the end of the year. So take a look at that. And just a reminder to always visit our website, tradeagt.com. On that education page, you can see Dan right here front and center for today's webinar. Dan, thank you so much for taking the time to put that presentation together and to walk us through it. It's very clear that you are well seasoned in putting on educational presentations, as you mentioned as well with your own YouTube channel. So thanks for doing that, and we would love to have you back sometime in the future.
No, my pleasure. Thanks, Natalie.
Thank you so much, and thanks to everyone who took time out of their day to join us live. And for those of you who will watch the recording, reach out with any follow-up questions, and we'll see you back here for our next free educational webinar. Until then, good trading to everyone.